Hello, NAAIA community. Get ready to relive insightful discussions, gain fresh perspectives, and be inspired by the wealth of knowledge our community has to offer. Let's dive into another episode.
Afternoon, good morning, depending on where you're coming from. Thank you so much for joining today's session. It's got to get amazing. We have such a great session, the panelists, the experts. I'm calling it the Avengers team. Nonetheless, today's theme is risk selection in real time, what's changing and why it matters, right? This is part of that Underwriting Roundtable series. So get ready. We got a whole full year of programming for you. Nonetheless, these discussions are based on industry-driven dialogue focused on the trends, the challenges, and quite frankly, all the decisions that are shaping these underwriting environments. And if you attended before, you know the vibe. We dropped the PowerPoint decks. We removed the high-level conversations. We're about to get granular here and have a great conversation. Nonetheless, though, in this particular space, the executive and management liability space, it's no different. There's so many challenging litigations going on in the environments of the underwriting space, all the way to emerging governance risks that are happening. And we're balancing these discipline judgments that are happening in the underwriting space, right? And today is all about finding the clarity in the gray area, which we know that that's pretty much all we're in all the time. But before we dive in, as it was mentioned earlier, I want to see you. Let's be engaging. This is not, we've been to school, right? Let's take that away. If you haven't already, put your name in the chat, the city you're representing, perhaps maybe what company you're from. And if you're from a NAAIA chapter and you're a board member, I got to see you. So again, thank you so much for coming here today. When we wrap up, you're going to be given a brief survey. We're begging you, please fill out that survey. As it's mentioned, this is going to outline the programming of our future events. And so the insight, the relevance that is needed, it all comes from you. So please, I'll be filling out that survey. Ask that you do it as well. With that being said, it's my absolute pleasure to introduce the one and only moderator, Natina Berry. She's a senior underwriter at Freeburg Environmental. She's going to help us guide this conversation, keep it a little funky fresh, but also keep us a little in line. So that being said, Natina, the floor is yours.
Thank you for bringing me up, Krista. While the panelists are coming up, I'm Natina Berry, Senior Underwriter at Freeburg Environmental, a Ryan Specialty Underwriting Managers company, and President of NAAIA New York Tri-State Chapter. I'll be serving as your moderator today. I'm joined today by two outstanding underwriting leaders, Kenza Leprec, Management Liability Underwriter at Ascot US, who brings deep expertise in management liability and governance risk analysis, and Wesley Butler, Vice President of Underwriting at NAAIC, with extensive experience in portfolio strategy, underwriting discipline, and leadership risk evaluation. To begin, Kenza and Wesley, please share a bit about yourself, your roles, the lines of coverage you focus on, and the types of accounts or industries that are currently the best fit for your appetite. Kenza, let's hear from you first.
Hi, everyone. My name is Kenza Lepre. I'm a wholesale management liability underwriter who writes private and nonprofit accounts at Ascot. I underwrite anything that is D&O, EPL, fiduciary, and crime for all classes of business outside of blockchain, cannabis, and crypto, which I call the BCC.
I'll just jump right in there. My name is Wesley Butler, the Vice President of Underwriting at NAAIC, which is based out in California. I primarily handle medical professional liability, which for those not in the niche that I'm in is basically E&O for medical professionals and organizations. I do a little bit of general liability. I can speak to products liability and cyber, mostly with a focus on the healthcare industry. So you may hear me give examples of risks that involve those two lines as well. And when I do say healthcare, I want you to broaden your thinking outside of just hospitals and physician practices. Senior living, which is everything from nursing homes to assisted living, correctional medicine, so the patients are inmates in either prisons or jails, CVS minute clinics, team physicians for athletic teams, ranging from high school to professional teams, online telemedicine practices. So think about all of those commercials you see on TV for Hims and Hers and Roe. they all need medical professional insurance too. So that's the wheelhouse that I'm in.
Hmm. In your current underwriting work, what emerging risk or exposures shifts are most noticeable in med-mal and management liability today? Kenza, we'll start with you.
I feel like currently within the last year, we're seeing a boom in AI focused companies. There's an AI company for everything nowadays. This has been really hard to navigate in terms of underwriting because it's not like we have the historical data that we have for education or healthcare. So it's been really interesting to see the shift because one day, you can have a company that is worth 100 million in assets, and the next day or the next year at the next valuation, it's worth 1 billion and it becomes a unicorn. So we're seeing a lot of that in our day-to-day on the management liability side.
Wes?
Yes. So, this is a great question, but I'm going to avoid the sexy headline grabbing topics like artificial intelligence and
Beat you to it.
psychedelics and mental health. I know we'll get to AI. We'll get to AI and psychedelics, and the explosion of GLP-1s. I mentioned the hims and hers. You know, for medical professional outside of COVID-19, medicine still deals with a lot of the same risks that it has in the past, right? Heart disease, unfortunate outcomes with deliveries, cancer, diabetes, mental health, traumatic injuries that roll into ER. So I would say the emerging risks these days really stem from two things: changes in healthcare delivery and the mindset of the patient. So hospitals used to be these meccas of patient care. You went there for everything. Now we've got surgery centers, we have standalone imaging centers, and we have hospital at home. So they're really trying to do everything they can to get things out of the hospital because it's become so expensive. Home healthcare is back to being a thing. So if you think about these old movies with the doctor with a black bag that visits your house and gives you treatment. Now the doctor doesn't have a black bag, they have an iPad and they write you a prescription and you get your medicine delivered by Amazon the next day, right? I mean, that's the kind of world that we're living in, even on the private practice side. More telemedicine, more primary care being done by non-physicians, so nurse practitioners, physician assistants, more healthcare providers with side hustles. They're working part-time one place, they're working full-time another. When does burnout creep in? And really from the patient side, because we're all patients, right? That's the hard thing, right? When you're dealing with medical professionals, that you are a patient, just like what your clients are seeing. There's a lot of individual vanity going on. So patient demands for cosmetic procedures, and these things are not being delivered just by trained cosmetic and plastic surgeons, but all manner of healthcare providers. You can get Botox at the dentist's office nowadays. We live in a social media society that's driving the proliferation of these wellness clinics that you see advertising hormone therapies, anti-aging, body sculpting. And then on the claim side, I would say people have lost all realistic sense of the value of money and who has it and who deserves it in the event of negligence. And every industry, not just medical professional, sure we could talk about it from environmental and D&O. Like these mega and nuclear verdicts are so outrageous
Mhm.
that sometimes you wonder if they're even insurable at the end of the day, right? So I will pause there, lest I continue to ramble on, Natina. So I'll throw it back to you.
Totally get it. So I'll add my 2 cents from environmental hat. PFAS in the healthcare is growing long tail exposures as well. They're persistent and links to serious health effects, raise med mal risks through potential patient harm allegations and increased management liability exposures when organizations fail to properly identify, manage, or disclose these chemical risks. So that's my 2 cents as well on that matter.
Can I add to
All
that?
right. Yeah, sure.
I think with the new policies that are going on, we're seeing shifts in, we've seen the shifts in DEI and reverse discrimination, which is creating a bigger shift on the EPL side. So I think these are trends that we're probably going to end up seeing a lot more of, especially in the next few years.
Yeah, very true. So we'll get to the next question. How are factors such as financial performance, governance quality, leadership stability, or industry pressures influencing risk evaluation more than prior years? And Kenza, you're up.
So in the last year, we've seen a lot more bankruptcies. I think year over year, we're up 11%. From December 2024 to December 2025, we were up 20% in bankruptcies. So really in financial lines, our job is to analyze the board and their financial decision makings. So we've had to take more time into analyzing what the financials look like and seeing if there's been growth year over year and really reading the notes and seeing what's changed, because that's really impacting our decisions as to the risks.
Wes, do you have any feedback?
No, I'm just kidding. So this is a little, it's a little different in the healthcare organizations than D&O, where you're looking at who's on the board, how long have they been there. But healthcare practices and organizations are businesses, and they face the same economic pressures as other industries do, right? They've got shrinking revenues, growing expenses, and so people are always looking to cut costs. And so we have to wonder, what costs are they looking at cutting? And by doing so, are they creating additional risk or liability, right? If you used to have 20 nurse practitioners and now you only have 15, right? And they're seeing the same amount of patients, maybe there's an increased risk there. Are you burning those providers out? What happens if they turn over? The presence of private equity in healthcare it's a lightning rod, but it's also grown over the last few years. Now, the good side of private equity is it's provided a lot of capital that is needed in healthcare, right? Infrastructure like technology, equipment, higher level staffing. But then you have to ask yourself, at what cost, right? Investors want to see returns. And then you have to wonder, are healthcare decisions getting influenced in the process of these investors wanting returns, right? Depending on what side of the fence you're on, depends on what your answer to that is. So, but healthcare is also saddled with an enormous amount of administrative burdens and oversight, whether it's from privacy of information, who can get what procedure and what state. I mean, these are all valid concerns. So depending on where the risk is that you're underwriting, right, you need to know what's going on in the state legislature, what's going on in tort reform. Healthcare practices do need succession plans. Many of them don't have them. This is usually what leads a practice to end up selling when it runs its course, or the lead physician or physicians decide to retire. How is that transition handled? Are patients getting the same level of continuous care that they were getting prior to the change? So these are all sort of things in that financial governance, leadership, and industry pressures. Everyone's pressured to write more business, right? But you still have to make a profit, and you have to remember, we can say no as underwriters. We should say no as underwriters. So you just have to kind of balance all those things at once.
Yeah. So the next question is, what elements of a submission, financial leadership, background, litigation history, controls, or disclosures have become more critical in assessing risk quality?
For us on the financial line side, like I previously stated, the financials remain the most important, in inclusion to really looking at the board. Culture starts at the head, and if you're underwriting a risk where the CEO has so many sexual allegations against him, and you decide that he's a good write, that's clearly going to affect your EPL. So yeah, those are the main two important things that we look at within our lines.
Wes?
So for this question, I have a couple of things here, and I will do my best to the person that put in the chat about using acronyms. I will do my best to not use any acronyms. I know how we love them in insurance, but a couple of things having to do with submissions. Claims experience is always critical, right? But on the healthcare side, I really think, and I talked about the growing shift of patient care and side hustles. But training and education are probably more important today than they have been in the past, right? So many side hustles going on, but is a weekend course really enough to be sufficiently trained in what it is that you're trying to do? Or think about it from this way. You're an anesthesiologist by day. That's what you've done for the last 15 years. But now you all of a sudden want to be a medical director at a long-term care facility and treat patients once a week there. Well, that doesn't really fit with what your day job is, right? It's not your side hustle is not really an extension of what you're doing. So I got to balance, what kind of training do you actually have in this area? And, is your experience in residency for geriatric medicine enough from over a decade and a half ago? So I would probably say training and education, a big thing. But then I'm going to go from the opposite side. I mean, I know we have agents and brokers who participate in this as well as underwriters, but I think we should be asking, what elements of a submission do we not need, right? There's a lot of insurance companies now that are going direct to consumer, and people don't like 20-page applications with a lot of attachments that are needed. Think about it from yourself. If you had to get car insurance or home insurance and you had to do 20 pages of application, you'd probably move to the next application that only had 10 pages, So, maybe it's time to reevaluate what is truly necessary and what is nice to have. I know there are some brokers out there who will appreciate a more streamlined process, which for all of you underwriters, us underwriters, it may help as you win the business, right? If you can make the process easier for a broker than someone else that has 10 to 12 subjectivities that they got to run down, maybe that's a feather in your cap. But I would, before we start throwing things out of the application, we should always make sure we're backing that up with some kind of data or rationale, or you have an okay from your boss, right? That's, those should be table stakes right there. Don't do anything that your boss has to find out about later, and then you're on LinkedIn looking for a job. So.
Okay. Well, I disagree. I think a complete, well-organized submission, including a supplemental application, is needed, which we know insurers and brokers love to complete those 10-page supplemental applications. But having a complete submission is so needed, as they add great impact, they speed the evaluation process, they reduce uncertainty, and they help us identify true risk drivers early. So for the record, sometimes, at least in my role, my desk, less is not more, Wes, but we'll get into the next question. When evaluating complex or borderline risk, how do you balance discipline with practicality while remaining within underwriting guidelines? Wes, you're up.
So we're talking borderline risks here. So let's just assume that pricing is not an issue when we're dealing with these borderline risks. I really think it becomes a matter of your company's strategic objectives. Is your company in growth mode? Are you being more restrictive and selective about risks? Is there going to be a reinsurance impact if you take this chance on this borderline risk? But within what you can do, I think as underwriters, we should always try and get creative. And can we solve the problem for the broker or the customer while also limiting our company's risk to that loss? So, and I would say, I know we were discussing this, so I might steal what Kenza is about to say. One thing I always tell my staff is when they're looking at borderline risks and they're sending them to me in a referral, I'm like, can you defend your underwriting rationale with a straight face? And would you feel comfortable doing so if that borderline risk has a loss in year one of you writing it, right? Those are really, and if you can't do either of those things, then maybe it's a borderline risk that you should pass on. You should pass on. So.
Yeah, I completely agree. I feel like, there's a balance between finding creative ways to write a deal and to be disciplined. And ultimately, yeah, it just comes down to, can I defend this? Can I explain why we wrote this if my job was on the line? So completely agree with you.
Yeah, it really, in my world, it comes down to staying true to my underwriting guidelines while keeping an open mind about the story behind the risk. So even with a complex or borderline account, I focus on what really matters. The credible controls, if they have in place engaged leadership, signs that the insured is genuinely committed to managing their exposure. Like if I have those things, then I feel more confident about presenting it, to management. That way we protect the portfolio, but still give fair consideration to risks that may not be perfect on paper yet show strong signs of managing and improving their risk. So that's where I see it. But we'll get to the next question. What are the most common challenges you encounter in underwriting today, and how are you navigating them? Kenza?
I think we're experiencing a really soft market right now, and I think that's really what's impacting me right now in terms of the deals that I'm writing. Some risks are just going for a lot cheaper that they necessarily need to. I've been seeing a lot of crazy things, and it's just been really crazy. I've quoted some things, for like 50K and someone did it for 5. So it's been a lot of drastic drops. So more so than ever, I feel like, you have to be confident in, your underwriting and be diligent, as it comes to the risk and what you're willing to take onto the books. And that's creating a lot of, opportunities for some people and affecting the books of others. So it's just been a little bit of just watching and seeing what the market is doing and where I can capitalize off of. And yeah.
So Kinza, can I ask you a question about what you just said? So you said, you're quoting it, people are writing it for 10 times less than what you're quoting it. Are these on sort of the new risks that you talked about earlier, or are these on tried and true kind of things, or is it all over the board?
A little bit of both. I feel like certain markets are just cheaper. Like, I feel like certain states are a lot cheaper to underwrite in than, they need to be. Especially Texas is a cheaper market than, say, California. And the things that I'm seeing done in Texas is completely different than what I would do. So it's been a little bit all over the board.
Okay.
Yeah.
Yeah.
What are you seeing on your end?
So I would probably say, I mean, I don't want to jinx it and use the word
Mm.
the kind of market that you said that you're in, right?
Right.
I don't want to jinx it, but certainly we experience in the MPL industry, or sorry, medical professional industry, we experience that same thing, right? People are revenue hungry, right? And so, you could quote something and somebody else quotes it for 20% cheaper, and they ask less questions than you do, right? So certainly a challenge. I'd probably say from a risk challenge, it's just these side hustles, right? Everyone's got a side hustle, and trying to figure out what is the right amount of minimum premium to get for these side hustles, right? Um, I mean, they're not working full time. You don't know how long they're going to be doing it for. So, but all it takes, whether you're doing 10 procedures or surgeries a week or 10 a month or 10 a year, right? All it takes is one surgery to cause a policy limits loss, right? And so then you ask yourself, is the person doing 10 surgeries a month as well equipped as the person that's doing 100 surgeries a month, right? And they have muscle memory that really, they know how to navigate if if something goes wrong and they have to act quickly. If you only see 10 a month, you may not have seen as many as, well, you clearly haven't seen as many as the other, right? So trying to get the right amount of minimum premium for these side hustles is certainly, it's a challenge. It's a challenge, and everyone's got different minimum premium thresholds, right? So it's what can you or what is your company comfortable with when it comes to those kinds of things.
And we should add that there are many new companies coming out with products as well that we're competing against
Oh
that
yeah.
are all over the radar. So that, along with incomplete submissions,
Back to submissions.
Shifting regulations and, just growing complexity of exposures, it does give you some challenges when you're looking at that desk. But, you can focus by, asking follow-up questions if you can get them in, if the brokers are, or direct client is getting back to you, and just staying aligned to your guidelines. That's what, we try to strive to do. The next question is, are there particular early warning indicators that signal heightened governance, financial, or litigation risk? Wesley, you want to start?
Yeah. So thinking about medical professional early warning indicators, there's early warning signs are difficult to pick up on in this particular industry, right? It's actually an area that the entire industry, medical professional, this is happening in other sort of niches, but we've really been hoping that predictive modeling and data analytics can help when it comes to these early warning signs. So, there's been some work done in trying to detect, based on prescription data, the amount of prescriptions somebody's writing, who might be a pill mill or an over prescriber. If we think back 5 or 6 years, probably right before the pandemic, about the opioid crisis, right? You had these doctors who were literally just writing scripts for anyone that came in. So we're trying to do some predictive modeling, looking at prescription data to be that early warning sign of trying to find out, are you a part-time family practice person, but you're in the top 3% of opioid prescribers in your state? That's probably an indicator of a problem. But if we want to talk about submissions, that kind of data doesn't come in on a submission, right? Like, you don't get that information. And so, where are you going to get it from? How are you going to really be able to pick up on those warning signs? And I'm sure there's warning signs for other things, people that are providing services that are really medically unnecessary, but then you got to determine who's going to determine whether it's medically unnecessary, so on and so forth. So, on the hospital side, where you do get the ability to do a deeper dive into the financials of an organization, you can really look in the notes section to see if they've got anything in there about potential liabilities or big claim, especially if they've got a sizable retention or a big deductible. But early warning signs on the MPL side are really, really kind of tough, because the data that you would need is not really collected in any type of aggregated way. And then the next thing you know, this wave of claims comes in, and think about from the standpoint of, we'll go back to news headlines, physicians getting accused of sexual assault and videotaping their patients and so on and so forth. There's no question that I can ask on an application that would tell me you're a pedophile or you're a sexual predator, right? Nor is anyone going to answer that question on an application. So it's really, I don't know what we're going to do from early warning signs on that, so it's kind of tough.
Yeah, I agree. On the employment practice liability side, or EPL, unless you have lost runs and you've seen a bad actor and they haven't gotten rid of the same, bad actor years over years, that's the only way that I feel like you can have a clear warning on the EPL side. DNO, I think, is a little more predictable if you're looking at the financials and you're looking at the working capital and the debts, to liabilities, the liabilities and debt maturities year over year. Those tell a story. But if you're, going off of just what you're receiving in an app on the EPL side, it's hard to have any clear warnings.
Okay. Well, looking ahead, which trends or exposure developments are likely to have the greatest influence on underwriting decisions in the near term?
I think Wesley should go first.
Okay, Wesley.
You want me to go first? Okay, I can go first. That I'm gonna tell that story that the non-depressing. Well, I'm like, well, we'll see. Let's see if you think it's depressing. But anyway, those sexy headlines I was talking about, I passed about earlier. So we'll talk about those now. And I think in a medical professional, artificial intelligence is really something that we're going to be talking. I mean, we talk about it all the time right now, but we don't have any data or anything to really talk about. It's there's a lot of doomsday scenarios, but I really think in the future it is going to really drive a lot out there. And it's twofold, right? It's what's going on in the healthcare space when it comes to artificial intelligence or augmented intelligence, which makes people feel better about their jobs, right? That AI is not going to take your job, it's just going to help you do it. But there are going to be some things that it will take away from you, and you'll have to do something else. Right now, we see practices and hospitals dipping their toes into those waters from an operational perspective. So there's artificial intelligence scribes that are taking notes and populating the medical record. There's scheduling being done by AI. There's chatbots that are being done by AI. When that turns into a clinical decision making that's done by artificial intelligence, that's when the risk is going to really change. And the thing about, it could change tomorrow, but the claim won't come for 2 to 3 years down the road. So we still won't know if we're pricing it properly. All we know is that we asked the right questions. So I think one thing that some people are trying to get their heads around or their arms around right now in insurance, whether they have it or not, I don't know. And if you think about AI, you think about driverless cars, right? If the driverless car runs into a light pole, whose fault is it?
Yeah.
Right? In the future, if you go visit a clinic and the artificial intelligence interface gives you a diagnosis, or even worse, it does not give you a diagnosis, whose fault is that, right? Is it the person that built the algorithm? Is it's something in the middle? And you might say, I would never do anything like that. But if you live in rural America, which is a lot of America, right? You may not have any choice about how your medical care is going to get delivered in the future. And you may only have some type of artificial intelligence interface. That might be your only option in the future. So, there in my underwriting career, there was a claim that happened. It was like over a decade ago, where a patient went to a clinic, saw a real human being, right? And they got their lab results back, and they were told that they had HIV, and they were put on the cocktail of drugs. So they're taking all these drugs, and then 5 years later, they went for like a primary care visit, checkup, whatever, and they got the blood work done again. Turns out they didn't have HIV. So they've been taking this cocktail of drugs for half a decade and didn't have it, right? But you can point a finger at someone, like the person at the lab that screwed this up, right? But what if that same kind of thing had happened with an artificial intelligence interface, right? Like, whose fault is it at that point? And so whether you're the products liability carrier, whether you're the physician carrier, D&O probably comes into it. Everyone's going to have their head wrapped around where that risk is going and how we're going to price for it and who's going to cover it. So,
Yeah.
I completely agree with Wesley. I think we need to really watch AI and how companies are using it. We've seen the rounds of layoffs, especially in the last year, and how artificial intelligence has impacted that in a way. So right now the questions are, will there be more laws to mandate how AI is used and in which industries, and who gets to create a new interface of sorts, and how will different employees continue to be impacted? And how will our industry continue to be impacted? We hear that we should be using AI for a lot of, efficiency, but what does that really look like in
sure.
our, so I don't know what it looks like on the environmental side, but these are the questions we've been having on our end.
Yeah, well, for us, it's more tightening regulations, growing exposure from emerging contaminants, and increasing impact of climate-related events. That's what we're seeing. These trends are driving closer scrutiny of controls, long-term liabilities, and that's what we have going on in environmental.
Mhm.
We'll get to the next question. What resources, tools, or research methods have become most valuable in supporting your underwriting decisions in the evolving environment? Kenzie, you want to go?
Yes, so when I first started underwriting, my manager used to make me read the DNO diary. And it was a great tool to really learn what DNO was and what was going on. And I've kept up with that. I think what is really also important is watching the news. Just knowing what's going on in the world really impacts what we do on a day to day. Like different stocks dropping, whatever policies are being in place right now. So I think those are the biggest two that I've felt has been most valuable to my underwriting.
Yeah, it's important. Wesley, you have anything?
Sure. So I would echo one of the things that Kenza said about watching the news. Just staying up to date with what's going on in your industry and your client base in the news. Get off TikTok and find a few, more than one, news sources or news outlets that you trust, and do some keyword searches for what's going on. And this will not only help you stay up on what the new risks are that you're underwriting, but it'll also help you find out about settlements and judgments and things that are going on out there that could also affect your underwriting decisions. If you got a submission in front of you and you just saw a 7-figure settlement for something along those lines in the state that you're underwriting it for, maybe you want to pass on that, right? Um, I think all of these things will help when you're talking to your boss, when you're talking to your clients, and you make a decision, and then you can drop these nuggets of knowledge and facts that you have found on your own. It really presents you as a subject matter expert. And even if you do have to give bad news, right? We all have to give bad news from time to time. I think that will help them respect your decision and know that it was backed up by a solid analysis. You weren't just saying no just to say no. Not like underwriters out there ever just say no just for the sake of saying no, right?
It's
Um,
not.
but people can really respect, if you're a subject matter expert and you're saying, look, here's some articles that you can read on this exposure. This is why we don't want to cover this, blah, 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 blah. And then I think another thing that really helped me when I first got into medical professional and I knew absolutely nothing about what was going on was get in good with someone at your company or another company, right? That you meet at an association meeting or whatever, that you like and you trust, that's in the risk management department or the claims department.
Mm.
The knowledge that underwriters can get from claims and people that do in-person risk management visits is invaluable. If there's some kind of a claims committee or a claims roundtable where you can just be a fly on the wall and hear about the worst things that happened when it comes to whatever you're underwriting, I really think that those are invaluable invaluable things. And I mean, I still keep in touch with risk and claims people from when I first started. And when I have questions, right, I shoot them a text or an email, and I'm like, what do you think about this? I think those things are really helpful and can also help build you as a subject matter expert. So
Yeah, it's cool. I mean, also, they have some cool podcasts out now that are insurance related that you can listen to for trends. And let's not forget, I swear by OneNote. I use it religiously. Uh, so that's a great tool. If you're not using it, you need to. It helps me with all my notes. So that's another good tool. And our last question is, as you think about the remainder of the year, what is one underwriting discipline or evaluation habit you believe will be most critical in maintaining sound management, liability, and med mal selection in a changing environment?
I think just doing your research. When I first get a submission, the first thing I do is Google them and just to see what's out there on the different client and just to hear what their story is. And I feel like that's been very valuable as it pertains to what lines I work in.
Wesley?
So, so Kinza actually stole my thunder on that one because I was going to say,
I like
if, if you've done your research whether you want to do that research using Copilot, whether you want to do it the old-fashioned way. You know, what I would say to new and experienced underwriters is to just trust your gut, right? New underwriters may not know what that means, but the experienced ones out there do. And sometimes you just get that feeling, your spidey senses tingle, hair goes up on your arm, and you're like, there's something about this risk that is just not right. I can't tell what it is, right? I just think if you've done the research, that trust those feelings that you get, and consistency is a good thing when it comes to underwriting. Your boss will appreciate the consistency. Agents and brokers out there will appreciate the consistency, and you'll feel more solid about the decisions that you make in your underwriting if you have a solid foundation of research. But that consistency is really good, really good.
Okay. And I'll add 2 cents to this one. The most critical habit this year will be also prioritizing the strength and reliability of an account's controls, right? Clear, credible controls remain the best indicator of how well an organization can manage evolving exposures that impact, what we do every day. So, that's where I go to, at least on renewals, especially on renewals for me before new business. But all right, so I appreciate all the insights everyone shared today. Let's go ahead and move into the Q&A. Feel free to drop your questions into the Q&A chat, especially anything you're curious about in med mal or management liability. Let's see what we have here. So Ruben Hall said, can you talk about the impact that tariffs have had in the D&O space with private public companies from an underwriting perspective, specifically with securities related litigation? I guess, Kenza?
Um, In regard to the tariffs, I feel like they've impacted mostly the revenues of the companies. I don't do a lot of public D&O, so Securities Act really affects mostly public D&O, so I can't really speak too much to it. But due to the tariffs, we've been seeing a lot of revenue losses, which have rolled into bankruptcies. So I think the correlation with what's happening currently is what's causing a lot of this bankruptcies that we're seeing year over year.
Okay. The next question is from Jason Clayton. How can organizations find and appoint Black-owned agencies? Maybe that should go to you, Wesley.
I knew you were going to send that one to me, and I don't know. That might be a place where NAAIA can help if they had
Yes, NAIA does have
they have a
resources for Black agents. So
right, if
yes,
they have a
hopefully they're members.
repository of that kind of information. Because like I said earlier, in the space that I'm in, there's a lot of direct to consumer out there, and on the medical side, and I think it's happening in all industries. There's so much consolidation in the agent and broker space, right? You've got the huge ones out there, the Aons and the Marshes and Gallagher's, and and they deal and they're just buying up all these independent agencies. So I don't know. I don't know how you would be able to find out that information.
Okay. And we have somebody who was interested in the podcast to learn what are the names of some insurance-focused podcasts. So I know Business Insurance has one that I get emailed about all the time. So that's why I know about that one. And I know Megan Bell has one, Insure Her. So that's another one. There's a few that we probably can share after the call. But yeah. And so far, that's the only questions. Any other last minute questions before we wrap up?
I think there's one. It's not in the Q&A, but there's a question
Okay.
with management liability. What can we expect to see related to coverage for executive and board oversight over artificial intelligence?
I think we're still figuring that out, honestly. I feel like a lot of things depend on what they're going to do in Washington regarding if there's going to be any laws that are going to be passed to help with AI. So as of right now, we're kind of just watching to see what's going to occur.
So I will say on the medical side for this, as I said, there practices and organizations are dipping their toes in from an operational. I think somebody put in there that they've seen some in the clinical research side. What we are telling practices from a risk management standpoint is having some AI oversight documents, right, that you have disseminated to your organization is better than no documents, right? And AI is changing so fast, you're not going to be able to keep up with it. But maybe if you have some kind of a plan to update it every 18 months, every 24 months, right? But sticking your head in the sand and using AI, but not having a policy around how your employees or practitioners should be using it is definitely not the way to go, because these plaintiffs' lawyers are going to just rail into, if it ever makes it to a courtroom, right? They will certainly not be afraid to rip into anyone that's using AI and doesn't have any kind of guardrails around it. So I think having something is better than having nothing, especially if you get into some type of lawsuit scenario.
Yeah. So we received another question. As a new underwriter, what would be the most important thing for me to focus on to be successful in builder's risk and inland marine? So I know that's not like the segment we're used to, but yeah.
Yeah.
As a new underwriter, what would be your guidance for someone coming in?
I think just being curious, asking a lot of questions. Like you're starting off, you don't know what you don't know, and it's better to just ask questions and ask to sit in onto any calls, any meetings, take notes, and really try to learn like the language that is used within those lines. And yeah.
I would echo that. When I said earlier about finding somebody in risk management and claims, you know, they deal with what you are actually writing insurance for, right? And so the vast majority of things that we write policies for don't ever report any claims, right? So you need to find out who's reporting claims, what they look like, because that's what you're actually insuring. And so if the more you learn about that, right? I mean, I know it sounds very doomsday scenario, right? Like find out who's suing you, find out who has claims. But I mean, that's the product that you're providing, right? I mean, that's what they're paying for. So the more you know about that, the better it will help you on the underwriting side. So I would probably say find somebody in claims, find somebody in risk that will feed you information that you can read and absorb.
Yeah. Yeah. Also, work with your operations team. Understand how the back office works. That helps you so much in the long run, right? When you have brokers who are questioning why things take so long, et cetera, at least you'll have a better understanding of what's going on around you. It's always important. And yeah, join organizations like NAAIA and network. So I think that's the last question I see in the Q&A box, I believe. So thank you, Kenza and Wesley, for such a thoughtful and practical discussion. We had a great time. I think so. And, thank you to the crowd. We enjoyed it today. And yeah, I'm going to turn this back over to Ashley.
Thank you. Natina, Wesley, Kenza, thank you so much. There were a couple of questions that we bucketed in the chat for you all, from the chat for you all. And so just because we have a little more time, I want to make sure that we give everybody
Okay.
the opportunity
Sure.
to answer the question. And the question was, what is one underwriting misconception you frequently encounter, either from brokers or newer professionals, that you wish the industry better understood? And Natia, since you were moderating this entire time, I'd love to start with you, so we can get a few more insights from yourself since you were managing the conversation.
Thank you for that.
I think the misconception that underwriters are not busy, we're not, taking your calls because we just look at it and don't want to answer a call. It's not true. The misconception that we don't pick up the phone. I pick up the phone all the time. I go out and market all the time. I mingle. You guys who know me know that. But yeah, there's a misconception that we're just behind our desks and don't want to talk to the rest of the world, and that's not true, you know, for the most of
Not
us.
not true at all. Look at y'all out here, spread the word right now. Kinza,
Yes.
misconception from that you wish people better understood for your role.
I definitely agree with Natina, but also that we underwriters are quick to say no. I don't think that that's fair or that's true. A lot of ways we try to find creative solutions, and some things just don't make sense. But I feel like 95% of the time you say yes, and the one time you say no, that's what gets looked at. So I think that's a misconception.
And last but not least, Wesley, Sir Wesley.
So I will do my best to not repeat anything that has already been said, but I will probably say the misconception that underwriters do not care, right? That we're just churn factories, we're turning over submissions, we're writing policies, and that we don't really think about what's going on in the uh, in the everyday scenarios of the people that we're writing policies for. And look, this is going to be different for commercial insurance versus personal lines insurance, right? I think for personal lines insurance, definitely a misconception that the underwriter just they don't care about my circumstance, and I had these things happen in my life, and that's why I didn't pay my premium, and that's why I didn't check that box, and so on. I mean, now granted, underwriters have heard almost every story under the sun, right? Like it's hard to get over on us, but the misconception that we don't care when we do say no, I think is it hurts sometimes. It hurts because we're people too.
We are people. I love that. I love that all of those things. So there's one more question that was in the chat that you all missed, and you sort of touched on it, but since I saw it multiple times, I wanted to make sure that I clearly asked it with just the last couple of minutes that we have for the day. And the way that I'll phrase this question is a little different than what it came, but I think it's going to help you answer the question. What would you tell your younger self entering into underwriting now that you wish you knew?
Oh
And I'll
wow.
start, Kenza. I'm gonna hit you with that one. Sorry, I didn't give you time to think about it, but it's your turn to lead.
What would I tell myself? I think just trusting myself a little more and having
Mm,
confidence. There's not a lot of us in those rooms, and sometimes you get the imposter syndrome that, like, especially within the wholesale, in professional lines, when I go anywhere, I'm probably the only person that looks like me there. So just trusting myself that, kind of I work to be here. I know a little bit of what I'm doing. I'm still learning, but just having more confidence in yourself.
mm. And Natina, you're up next.
Okay, so I wish for my younger self I would have joined NAAIA sooner. Seriously, right? Because no, it's a great organization. You're welcomed, you feel welcome when you come in, and like Ken's saying, some spaces you don't feel that, right? So
Mhm.
to feel that would maybe empower you to want to stay in the industry longer and grow a little bit more, right? And also, as Issa Rae would say, network across more. I should have networked across more earlier in my career, right? Because you get to learn more about the organization you work for. So I think those are the two takeaways I would have done it.
Thank you. And last but not least, Wesley, could you wrap us up?
Yes. So I am going to say what I would tell the younger me is not all about you, right? And somebody mentioned earlier that the lines are graying between these coverages, and D&O is bleeding into medical's bleeding over into products liability. And so sometimes when we look at stuff, well, we're focused on our desk, right? We're not worried about what's going on other people's desks, right? And if you're dealing with an agent and broker, if you think you have 400 submissions, they got 600 clients, right? That are all calling them and dealing with them. And so how can you make it easier for them? They'll be more willing to make it easier for you, right? Thinking about the people in our own organizations, they have things on their desk too, just like you have things on your desk. And so, I'd probably tell the younger me, like, it's not about you. think about how you can be helpful and a resource for other people, which may make them more open to being a resource for you versus just like plowing your way through it, come hell or high water, So, that's what I'd probably tell my younger self.
Well, all right. Well, I think that the chat enjoyed this conversation. I seen notes that people learned more, where we had claims folks and brokers on the call as well. And so hopefully that transitions to them to help the underwriters in their particular corporation or company.
Thank you for watching this flashback episode of NAAIA. We appreciate your time and hope you found the insights valuable. Stay tuned for more enriching content. Until next time, thank you for being a part of the NAAIA community.